Hello guys again. This is the second recording of the day, and on this chart I would like to talk a bit about the US dollar Swiss franc in this analysis. Now as you can see, the market here this is the market. The euro dollar 130.57 and Australian dollar 0.967. Aussie has been beaten to the death today. It had a spike to the downside below the 0.90 level, but then it has been bought aggressively for a nice 60 pips from the downside. US dollar Canadian dollar below 104 and US dollar Japanese yen at the 99. I would say that a consolidation day for the rest of the London session. We are still having something like 40 minutes from the London session, so I would say most likely a consolidation day, as the economic releases are in front of us, are behind us, waiting for the fixings to come, and then probably will resume the day in this node. If you remember, I did, and if you don't remember, you can check on the official YouTube channel on binaryoptions.net.au that we did this US dollar Swiss franc analysis, calling for 1, 2, 3, 4 and the fifth wave to the downside as a possible impulsive move, or rather an ending diagonal, I would say. Based on this, it remains to be seen. Now the thing is, what I would like to show you and to focus on this analysis is this move here, and we'll go on the daily chart, and this daily chart on the US dollar Swiss franc represent that move that started from the lows here and goes to the highs here. So from the lows to the highs, this is the move. And the recording is being called the trend line still holds. This is the trend line that I was saying that I'm looking at, and this is the trend line that still holds on the US dollar Swiss franc, and this trend line here, as you can see, still holds. Now until this still holds, and the structure of the price, as you see here, doesn't look impulsive at all, so until this holds, I would say that we have the chances for the move still to go to the downside. This resembles with a triangle, and it remains to be seen what kind of a triangle is. It is a continuation pattern. In this case it should break higher, or it is a correction pattern. If it is a correction pattern, then the previous move here should be labeled as an X wave, and this should be only something like A, B, C, X, and then A, B, C, D, E. From my point of view, as we all know, that waves A's in a contracting triangle, if this is a wave A, are most likely, let's say, out of this degree, are most likely waves A to be a zigzag type. Now we have a nice possibility for this to be a zigzag, and that would be the A. Now a zigzag, it is being formed out of three different ways in the form of A, B, C. So we have an A of a lower degree, so A of a lower degree, then a B wave here, and then a C wave here, so A, B, C. From my point of view, this is the first leg of a triangle, and that would imply that this triangle will break to the downside. I don't think that this is an A wave, so the triangle to break to the upside, because A waves, I told you, typically have the form of a zigzag. Now if this is an A wave and this is an ABC, then most likely this is a B wave, and then this is a C wave, and then this is a D wave. So A, B, C, D, and there you go. The E wave just ended here. So A, B, C, D, E, it implies it implies that we are looking for a possible breakout of this triangle when the triangle is going to break to the downside, and normally this should end based on the previous recording. Normally this should end a fourth wave type of a higher degree, and this higher degree should be out of this size. And it doesn't really mean that the lows are going to be taken. This is a higher time frame, the daily, but it takes into consideration all the lines. Nevertheless, we are still in a contracting triangle. Now, if this triangle breaks to the upside, then it should be treated like a continuation pattern. But until then, we are just going to take into consideration that the triangle started here, and most likely ended with this move the Fed in the United States just did. So it remains to be seen how price will react from this moment on. But if this triangle is going to stay like this, then this should be the X wave of the same degree, and this should be an ABC. So ABC, most likely with an A, then a B wave, and then a C wave to the upside, and the C wave here to be in the form of an ending diagonal, and this ending diagonal to come 1, 2, 3, 4, 5. So A, B, C, or maybe A, B, and C, and that would be another explanation. It doesn't really matter. The important thing and the important fact is that this is an ABC, either like this or like this. Now, if this is an ABC, then we have here another important contracting triangle for the X wave, in the form of a complex correction of a lower degree. So the contracting triangle breaking higher, making A, B, C, D, E. So about time to move to the downside. What I would look for as a possible target to the downside, of course, these are the lows in the 0.70. It implies that on the long term the US dollar is going to be punished. Now, you know my bullish view on the euro dollar on the higher time frames. This is only coming to confirm my bullish view on the bigger time frame and on the bigger picture for the US dollar. So we have a nice ABCX, and then this triangle. The inner structure here of the waves, it is being formed most likely out of a complex formal correction with ABCX, ABCX, and then ABC as a triple combination, or a double combination with a zigzag and a flat. The same here. This is a small triangle inside of the correction. Like this. So this is of a lower degree, again, A, B, and C. Now this is clearly a contracting triangle, and it is a beautiful one because it's on a higher time frame and gives us opportunities to trade it differently. But if this is a triangle, and you know that the US dollar Swiss franc is inverse correlated with the euro dollar, not on the let's say 1 by 1 pip, but nevertheless it used to be. So if this one goes to the downside that much, if this one breaks to the downside, then look for the euro dollar to break to the upside. Until next time, stay safe on the markets and trade good. Bye bye.